Absolutely. You know, not to mention that we have the RBI policy next week as well. So back home, let's not forget about that. The RBI will be meeting, and we have the CPI data to reckon with in terms of, you know, the 7 or sub 7% figure. And separately, we do have the GDP data that they would take cognizance of, which was largely in line with estimates for Q2. But let's move on to some news then. In its latest revision, the government has halved the windfall tax on crude oil to 4,900 rupees per ton from 10,200 rupees earlier. Sonal, you've been tracking this story. Give us more.
Yes, it's very positive, the move that has come, and largely expected also because of the way crude prices have fallen in the last 15 days. To give you the numbers first, on crude oil production, the windfall tax has been cut to 4,900 rupees per ton, which is almost halved from the last number that we had, 10,200 rupees per ton. On diesel, it will reduce from 10.5 rupees per litre to 8 rupees per litre. On petrol, it's still nil, and on ATF, it continues to be at that 5 rupee per litre mark. It is a positive, as I said. Now, CLSA says that cut in windfall tax on domestic crude oil production is to the tune of $9 per barrel. This in comparison with the $10 per barrel fall that we've seen in crude oil prices. So it's $1 per barrel less, but still it is positive for the likes of ONGC and Oil India, because it says that it is implying a post-tax realization of $78 per barrel. And right now, these stocks are factoring in valuations of around $45 to $50 per barrel. So there is still scope for an upside. Just to give you some perspective as well, back in July when this duty was introduced, crude oil tax was 23,250 rupees per ton, diesel was 13 rupees per litre, ATF was 6 rupees per litre, and petrol was 6 rupees per litre as well. So there has been a massive cut from those levels as well. And yesterday itself, Jefferies had put out an interesting note where they said that they see the possibility of export duty on diesel ATF being withdrawn completely in the near future. And there will be a $2 per barrel impact in Reliance's earnings if this continues at these levels. But if it goes away completely, then in their FY24 EBITDA, there could be a gain of $1 billion. So that's around 5% of earnings, and substantial as well. So these stocks will be in focus. We'll have to see, of course, how crude prices move from here on. They did surge overnight. But yes, for now, they are stabilizing at these levels.
Okay, all right. So that's on the windfall tax. But let's now focus on Paytm. Brokerages are in fact bullish on the stock. This is after the management, which held an analyst meet, says it expects to break even in terms of EBITDA by September next year. Surabhi, who's been tracking this, joins in with the latest.
Hi, thanks for that. Paytm management hosted its first physical analyst meet here in Mumbai yesterday, wherein they have highlighted a large growth opportunity for the payments business in India. They've said it has a potential of 100 million merchants and more than 500 million payment customers, and this opens an opportunity to cross-sell financial services and other business offerings. They also provided some granular details on their key revenue drivers across business segments and the breakup of key costs, which will help them to achieve their adjusted EBITDA break-even target by FY24. Additionally, they said they don't see any significant regulation risk to affect its payments margin. The net payment margin should largely remain steady even if there is a reduction in MDR, which is the merchant discount rate. They said on credit cards, they have seen significant pickup in the business momentum. On commerce business, management disclosed that the GMV was close to 2,000 crores and the revenue was 130 crores. On profitability, management expects to become free cash flow positive in the next 12 to 18 months. On back of this, brokerages have released their reports. Goldman Sachs have a buy rating with a target price of 1,100 rupees. Morgan Stanley has a buy target with a target price of 695 rupees. CLSA again has a target price of 650. JM Financial has upgraded its rating from sell to a buy with a target price of 600 rupees.